Good morning. This is Norm Schriever with the Real Estate Marketing with Norm podcast. And I'm actually recording this podcast from a hotel room here, which is situated right next to a church, and it's Sunday morning. So you probably hear from time to time some singing and gospel hymns and preaching and the organ and the choir. But that's definitely apropos for today's guest, Ryan Kuhlman. Ryan was just named the youngest ever president of the National Real Estate Investors Association, youngest ever to be president of that organization. He's a seasoned investor. He's helped thousands and thousands of people invest in real estate as the president of the Broward Real Estate Investors Association down there in Florida, as well as the Miami-Dade Real Estate Investors Association. And Ryan was just featured in Yahoo Finance, and is really looking forward to take the reins of the presidency and lead that organization in 2020. Today, Ryan and I are going to talk a lot about investing, real estate investing, how the average person can get into it without a ton of capital, without a ton of know-how or a huge network, and make significant money or even a living investing in real estate. So this is going to be a fantastic talk, and we have the choir and the gospel music in the background, hopefully. Thanks so much. Here's Ryan. Good evening, Ryan. Super excited to have you on the podcast. If you don't mind, why don't you introduce yourself to our listeners?
Yeah, sure. So my name is Ryan Kuhlman. I am the president of the Broward and Miami-Dade Real Estate Investors Associations. I also own a company called WJL, and I've also been bestowed the honor of becoming the youngest president of the National Real Estate Investors Association for 2020.
Yeah, that's pretty amazing. Youngest ever. And how many years young are you, buddy?
47.
Nice.
So, and the National REIA has been around for about 34 years. So it was definitely an honor. There were a couple of board members actually that were in line for presidency before me, but the board voted unanimously because we have a new program that we're doing with Home Depot, which is a kind of a known company around the world. And we have the largest, with National REIA, we have the largest Home Depot program. It's an incentive program. We did about $1.7 billion through Home Depot with our fellow brother and sister REIAs around the country. And so that's a really big program for us. So we're renegotiating, and we're doing some things here for the state of Florida as well. So the board thought that I would be the perfect fit for being the new president. So I was very honored.
Oh, that's amazing. Yeah, and you take your presidency in 2020, right?
Yes, I start January 1st.
Amazing. Now, are there perks? Is there like a NREIA White House? Is there, do you drive around in a bubble car with a bulletproof vest? What are we looking at here?
Yeah, no, it's not quite that high profile. I'm not going to have Secret Service, protect me for the rest of my life after my term, unfortunately. The interesting thing is that it absolutely will give me some more insight into real estate investing around the country, because I'm going to be getting more in depth with other REIA leaders around the country. So I'm going to be learning a lot more about other markets and what's going on there as well. And of course, it's going to be an added benefit for my members here for the Broward Real Estate and Miami-Dade Real Estate Investor Associations, because we're going to be really pushing some new benefit programs and things that National REIA hasn't really done thus far. So we want to really expand some things, and especially with expanding the Home Depot program here for South Florida, that can only be good for my members and other investors here in South Florida as well.
Yeah, that's awesome. Wow, yeah, and there is no larger national brand in the homeowner or fix-it-up space to be partnered with. So that's pretty monumental right there.
Yep, absolutely.
Yeah, and tell me, if you want to backtrack a little bit, tell me before you became El Presidente, where you grew up, how you got into real estate, what sparked your interest in the field.
Sure. So I was born in Ohio, but I grew up, well, let's just say in the Midwest, because we moved around a lot. No, I wasn't an Army brat, but my mother and her second husband were both working on their master's degrees and dissertations for their PhDs. So we were situated at different universities in different places around the Midwest. And I I got my first taste of real estate from my grandpa, who was, I say in a nice way, he was a landlord, but it's probably more a slumlord would be more of an accurate term. He had a lot of low rent district rental properties and that sort of thing. And I used to go over in the summer times and help him paint his rentals, getting ready for the new renter to come in and everything. And I just remember him, collecting rent checks and things and asking him questions. And my dad had a conversation with me, one day around that time when I was about 18 years old. And he said, there are more millionaires made in real estate than all other industries combined.
Yeah.
So, I will admit that my focus at that time as an 18-year-old, like most 18-year-olds, was pretty narrow. When I heard the word millionaire, that's all I thought about. I thought, well, great. If real estate creates a millionaire, that's what I want to be. So, so I had kind of, had my first sort of dreams and aspirations about getting into real estate at that time. But it wasn't until my, later 20s, early 30s, when I got here to South Florida, that I really started making friends with people that were in the real estate market. Either they were licensed or they owned a couple of rental properties and that sort of thing. And I met my, which is now my business partner for a little over 20 years, Anish Dave, and he was actually already a licensed real estate agent. So he had kind of talked me into getting my license, which I did, and I actually started, instead of becoming a realtor first, I first became a consultant for the third largest converter developer in the state of Florida in 2000. Wow.
Interesting.
So we were buying, 100, 200, 400 unit complexes. I wish it was my money. I wish I had that much money at that time. I wasn't buying. When I say we were buying, that was more the developer was buying. But what I was doing was consulting on setting up. I was sort of the liaison to all of the legal entities in order to create the associations, to convert the rental properties into condos, so that they had homeowner associations affiliated with them. And I was also in charge of their marketing as well. So I was in charge of the marketing department.
Wow.
And obviously, having that experience and seeing this guy as the developer making all the money, I was on salary as a consultant. So that lasted about a year or so, and I was like, all right, I'm ready to really dive into this. So I started doing some stuff in real estate with my realtor hat on, getting some listings, looking for some properties for investors and that sort of thing to get my feet wet. And in 2003, Anish Dave and we formed the Urban Life Design Group.
Okay.
So what we did was we took his experiences in real estate and mortgages and banking, and my experience in conversions and other parts and aspects of real estate. And what we were doing was creating homeownership opportunities for families of low income, single mothers, that sort of thing. So what we would do is we would, combine investors, purchasing properties, rehabbing those properties, and we would find and source grants through like Bank of America, Citibank, and a few other lenders. And then we would also work with the cities, municipalities, Fort Lauderdale, Miami-Dade, and the counties. And we would try to basically pull together and draw as many grants as possible for down payment assistance. So, for instance, I remember one of our first clients was a single mother. She was a teacher in Broward County, which really kind of hit home to me, too, because my mom, she was a teacher and educator growing up. So I kind of have a soft spot for teachers. And what we did was we put together enough grants to get her $75,000 that she could put down on her mortgage so that her payments were less than $1,000 a month, and she could afford that.
So probably less than renting. Yeah, so all of a sudden she's a homeowner, but she never would have been able to come up with that down payment on her own, huh?
Exactly. And we obviously too, we're working on the side of with our rehabbers and other investors, and we were getting them to, instead of trying to sell every single property at the absolute highest price possible, we said let's do 10 properties and let's give these people a break. Well, obviously I'm asking, not asking them to not make any money, but let's try to do a good thing, help them out, and make money at the same time. To me,
Yeah.
that's a win-win situation in real estate when you go out there, and that's probably where I learned to this day that my real estate business, really is encompassed by me having the desire to go out and help people. The money will come.
Yeah.
If you just think about, let me go out and take my resources and my knowledge and everything that I have, and let me help homeowners, and do a good thing at the same time, the money will come out, after that. So this was in 2003 to about 2007.
And that's when,
and then of course,
and not to interrupt, Ryan, but that's the period where real estate was going absolute batshit crazy, across the country, but also especially in South Florida, right?
Oh, it was unbelievable. I mean, in South Beach, there was an ongoing joke that when you bought a condo, how many times were you going to sell it, or somebody else was going to sell it and resell it before somebody moved into it?
Yeah.
So the average condo, would be sold 3 times before anybody even actually moved into it.
Whoa, that's insane.
So, yeah, it's crazy. And I mean, and this was for a lot of properties. Most properties were purchased the first or second time as somebody just with the intentions of saying, okay, let me, buy this property. I'm going to pay the insurance and taxes, and then I'll wait for 6 months, and then I'll resell it and make $50,000.
Yeah. Wow.
Yeah. So it was the time. I mean, that was really, but what a lot of people don't understand about the real estate cycle, that when you see a market like that, when we are just totally going out of control, and property prices are rising that quickly, we cannot sustain that for that long.
Yeah.
And obviously we didn't. And unfortunately in 2007, the market crashed, and Anish and I were right in the middle of a $4.7 million seller financing deal in Oakland Park, Florida. It was 65 apartments, and we were going to convert it into affordable condos. And when the market crashed, we had lost that deal. We had lost all of our properties. And I even, had lost my car. I mean, I literally had $997 in my bank account. And luckily, the building I was living in, which was also going into foreclosure, this was also another building in downtown Miami that we were trying to create an affordable project out of. Luckily, the developers, when they knew they were losing the building, they signed a 12-month lease right before the foreclosure was enacted, the foreclosure lawsuit, because in the state of Florida, if you have a lease in place before the foreclosure, they have to honor that. Even if the bank takes the property back in the foreclosure, the tenants can stay.
Yeah.
So, he knew I had just lost everything, and he was about to lose everything. So he was like, here's a 12-month lease. We just signed it and said, you're paid in full. So I had, unfortunately, a place still to live, but I didn't have a car to drive. And luckily enough, I lived close enough to the Broward County Clerk of Courts that I walked to my bankruptcy hearing in 2009.
Unbelievable.
And yeah, it was probably the worst time of my life. I mean, I've been an entrepreneur all of my life. Since I was 19 years old, I've started companies, and there's always been certain factors and things that have happened, and it hasn't always worked out, and I've made some mistakes and then learned from those mistakes. But this was one of those times where, I really thought things were going well. I mean, we were doing really well in real estate, and I had never lost that hard before.
Yeah.
This is totally different. Having $997 in your bank account at 30 some years old is not a fun place to be, and not have a car and be a single guy in Miami. I mean, I can't even take a girl out on a date,
Yeah.
Unless I pick her up on my bike.
Pick her up on your bike and take her to Subway with a coupon, right?
And they didn't have Uber at that time.
Yeah. Let's if you don't mind, I want to pause here a second and talk more about that time, because I truly believe you learn more, especially as an investor, you learn more by getting your ass kicked in life, both personally,
Absolutely.
professionally, learning about risk, learning about cycles, learning the important difference between speculation and investment. So maybe in that context, you could talk about that speculation. People thought they were investors buying these condos,
Yep.
but they were
Yep.
really speculators. If you want to talk about that for a second.
Okay. So so this was 2009. My bankruptcy was discharged, and now I'm basically starting over fresh again.
Mm,
And reflecting back on it now, it's interesting because we thought both my business partner now, we both thought we were investors at that time. A lot of people thought they were investors,
yeah.
and what we actually realized is that we weren't investors; we were speculators. We
Mm,
were hoping and waiting and counting on the market itself, and realizing that that is exactly what got us in trouble in the first place. And if you're not able to see those signs, which the majority, 99% of the smartest people out there in real estate did not see the signs that the crash was coming.
yeah.
So it's kind of one of those things where you have to learn from your mistakes. And looking back at it now, and the reason why over the last 11 years, and I'm knocking on wood, we've never lost a single dollar in any of our real estate transactions is because we're not speculators.
Yep.
We weren't counting on the market just coming up and continuing to increase in one direction or another. So for us, it really made that difference to say, okay, now the way that we do our real estate, the way that we do our investing, we're not speculating, hoping that, I'm going to buy this property in an up-and-coming area, and then I'm going to sell it in a few years for a lot more money.
Mm,
No, we're not banking on those things. What we're doing is a little bit different now, is instead of actually looking for properties, we've learned that you look for motivated sellers.
interesting. Okay. Tell me about that. And this is part of what you do with NREIA and also with Flip Coach as well, right? Where you took your negative past experiences and you decided to educate the public and empower people not to make the same mistakes, but to make money in real estate. So yeah, talk a little about
Exactly.
that. Yeah.
Yeah. So basically, for us, learning this over the years and learning to kind of switch our mindset on how we do our real estate investing is that looking for motivated sellers, no matter if it's a flat market, a soft market, it doesn't really make any difference. There's all types of motivations. People get divorced. People have a fire in the kitchen, and they don't have insurance, and they just need cash for their property. People
They
inherit
get
properties
old.
that they don't
Yeah,
need.
they get old and they don't want to deal with keeping up a house anymore, right?
Exactly. There's all kinds of different ways. So instead of looking for properties, we look for motivated sellers, and this is what we teach through. I have a local mentor program here in South Florida, but I also have launched a national mentor program called the Flip Coach. And what we do in both those programs is teach people that you're looking for motivated sellers. It
Mm,
doesn't matter if a property is a townhome, a condo, a single-family home, a 12-unit building. It makes no difference. What makes the difference is how motivated is the person to sell. Because it doesn't matter, any good deal that I've ever done, any good deal that any investor has ever done, always has one common element. There had to be a motivated seller.
mm,
If that seller wasn't motivated, right, then you're not going to get the price that you want. If somebody is like, yeah, I've got this rental property, but I'm renting it, I'm getting $2,200 a month, and I'm cash flowing on it, and I just put a new roof on it. I don't really need to sell, but I'm just kind of like seeing what the market's like. What would you offer me? If I have that kind of conversation with somebody, I already know they're
yeah.
not motivated to
Yeah.
sell. They're going to think their property, like most people treat their properties like they think it's like a child, one of their children, that they have all this pride and everything in it. They're not actually looking at the facts. And, when an appraiser looks at as, properties that sell in the area determine the value of your property, everybody thinks their property is always, well, my property's the best in the neighborhood.
Yeah.
It's worth all of this money,
Yeah.
Well, their story changes if they've got a gambling problem and, Big Tony's going to come break their knees if they don't, pay the VIG very soon. So that guy is a little bit more motivated. And I tell that story because that's literally happened before.
Man, that's crazy.
I
And
had
we call that
yeah,
we call that the gold-plated bird bath syndrome, where people go, "Oh, I put in this I bought this beautiful gold-plated bird bath for the backyard, and so my home should be worth $25,000 more,"
Yeah, exactly. So, and it's funny because throughout this whole experience of really relearning real estate and getting to a place now of confidence that I really kind of understand the markets to the extent that I know and feel inside that I'm never going to lose again. I'm not going to be in the same place I was again. It doesn't matter what happens to the market. I know how to move and with the ebb and flow of the real estate market. And it really led us to a place to say, you know what, we had an opportunity. The previous owners, my mentors, Bill and Jan Leon, who used to own the Broward Real Estate Investor Association and WJL Financial, the other company that we own, they gave us an opportunity to learn, wholesaling, flipping properties, rehabbing, that sort of thing. And it's really kind of that essence of wanting to sort of give back. We recognize not just people down here in South Florida, but the reason why I created the Flip Coach program nationally is that there are so many people that want to get into real estate, but they're so misguided. And we really wanted to make sure that what happened to us didn't happen to other people that want to get into real estate investing. So
Yeah.
that's really what our core essence of what we do and why we have our mentor programs is to keep people from getting into the same position that we were in.
Yeah, it's fascinating too. And you talked about a few things here that you talked about, like a speculator versus an investor, and a speculator basically is trying to make money just when the market's going up, and they don't add any special skills, any they're not fixing up the property really. They're just basically waiting for
Right.
the market. But an investor can make money even if the market is in a downturn. In fact, I bet you secretly are sort of, I don't want to say excited because a lot of people are going to lose money, but you're sort of licking your chops at the opportunities that will arise once our economy and our real estate market enters that next cycle, that downturn. So you're
Yeah.
probably you're probably going to make more money in long term when the market is down, huh?
100%. And it's funny because we were talking about that this morning. We actually had a Meet the Mentors event, which we do about 6 times a year, and it's a free event that we actually held it here at our headquarters. We have a 45-person classroom, so we had about 42 people here this morning at 10 a.m. And they're wanting to get into real estate. These are all newbies. So talking to them today about that and about why the time is now is that when you do look at the real estate market and you look at the trends in the market, I don't think that it's pertinent for anybody to spend years trying to study and trying to really understand because there's so many factors that are involved. It's just a matter of knowing that you got to be prepared when it does come and look for the signs.
Yeah.
And so the correction, as they say, quote unquote, it's not going to be a crash quite like 2007, but for about 6 to 8 months, we've already been seeing the signs and it's ramping up. So we are headed for a correction.
Hmm.
And that was the topic this morning, is to let these newbies know, hey, you're in the right time right now.
Yeah.
Like, 5 years from now, you're going to look back and say, man, in 2019, I got into real estate and it was the right time, because all these homeowners are going to be facing foreclosures again. We have adjustable rates of mortgage, which have gotten people into trouble in 2007. And that was the main reason for the crash. Well, we're pretty stupid in business and capitalist society. We're greedy. So banks started, lending and doing adjustable rates of mortgage again. And then the other issue is that a lot of, millions of Americans, they remodified their loans facing foreclosure to get, a better interest rate and to get a lower payment so that they could get back on board making payments and keep their homes. But the unfortunate part is that the majority of applications around the country were based upon adjustable rates of mortgage within 5 to 7 years.
Oh, interesting. So you guys have that much of a critical mass of homeowners who went through a modification who are going to face the hangover from that 5 to 7 years after the fact, huh?
Absolutely, and it's
Wow.
happening all over the country, and it's kind of a trickle effect or a domino effect. Once a few homeowners start going into foreclosure, then the real estate agents and the numbers and the data comes out, and people are like, oh, we're heading towards another correction. Once someone just starts to say that, people become apprehensive. They
Yep.
don't want to buy.
Yep.
So then what happens? Interest rates go up a little bit. And then we get into this portion where homeowners aren't able to afford their mortgages, and then that causes a possible trickle effect because it's affecting the economy overall. Then other people are starting to lose their jobs, which again then put them into foreclosure. So it's just kind of this domino effect that happens. And that of course we don't wish for these kind of things because, like you said, people are going to be when people face foreclosure and in a down market, suicide rates go up. Divorce rates go up. There's all kinds of obviously other, socially and economic problems that stem from that. But, the reality is that we don't create that as investors that are wholesalers and flipping properties and rehabbing. I don't create that problem. Yeah. What I do is come in and clean up the mess afterwards, and I help homeowners stay out of foreclosure.
An interesting thing too, and you're absolutely right. This downturn is going to be a little bit different because in the past, everyone was getting 100% financing, option arms, so their equity was actually going negative, right? The difference now, you're going to see a lot of people, like you said, who are going to be payment sensitive because their loan is adjusting or because they just bit off more than they could chew. The big difference now is that people are going to have equity. So I think instead of mass, millions of people just walking away from their home and foreclosing, you're going to get people motivated to sell, to squeeze every drop of that 10 grand, 20 grand, 50 grand, 100 grand of equity that they maybe have since they, stayed in their home since the downturn. So you're probably going to see, a huge wave of people who can't afford their payment but have some equity and just want to get the hell out, which is amazing for investors, right?
Yeah, so basically that's what we call pre-foreclosures with equity, and it's where a homeowner is facing foreclosure. They have equity in their house. The best choice for them is to sell as quickly as possible because what happens in a pre-foreclosure, when I say pre-foreclosure is the time that they receive the lis pendens notice of foreclosure lawsuit, all the way up to the time the property sells at public auction.
Okay.
So, as a pre-foreclosure, the homeowner owns it. They're on title. They can do whatever they want to the property. They can paint it pink. They can raise a, pig farm in the back. So, a pre-foreclosure, the problem is that the bank is charging late fees, penalties, interest. The moment you stop making payments, they start adding everything up, including their attorney's fees, which is legal for them to do.
Yeah.
So your equity is getting eaten up, and the average is what we see is about $100 a day. So every single month you lost about $3,000. So the reality is that if you're a homeowner facing foreclosure and you have equity in your house, the best thing you can do is sell it as quickly as possible, take as much of that equity as possible, and then start over.
Yeah.
But the other side of that coin is that you've got so many homeowners. We are not taught financial planning in a proper way. When we get out of high school, people aren't taught that when you buy a house, it's an investment. So the problem is, the other side of that coin is that homeowners don't treat their homes like an investment. We're not taught and educated when we come out of high school and ready to face the world and start a family and buy a home. We're not really taught proper financial planning. Mm-hmm. So when homeowners, are emotionally attached to their homes, they don't want to leave. Their desire is, and they also feel defeated. They feel like, I'm going to lose my house. It's going to be less than 20% of homeowners that even apply for a loan modification are going to be able to get approved and keep their home.
Yeah. And like you said, it might not always be in their long-term best interest to even get approved based on, the principal increase and adjustable rates down. They're just sort of kicking the problem down the road, huh?
Yeah, and it's even worse when it's a pre-foreclosure without equity. When the market really drops and people have over-leveraged and taken out their second and third mortgages and they owe more on their home than what it's worth, for those people to try to keep their homes is literally insanity.
Yeah.
Because you could equate it to if you're trying to remodify your loan that has as a property that has no equity, that's like when you bought your house and your real estate agent called you the night before you bought it and said, "Hey, I want you to pay an extra $50,000 for this house."
Yeah.
No one in their right mind would ever do that. But when you remodify a loan to stay in a house that has no equity, that's exactly what you're doing.
Wow. Unbelievable. So, and you mentioned wholesaling, and I know there's different, you say real estate investing, there's so many different ways to make a dollar or invest in real estate. People know, of course, about flipping homes from all the fancy TV shows, and it's a lot harder than they make it look when you pencil out the numbers. So I'll have you talk on that. But also tell me a little about wholesaling because most people don't even know what that is.
So it's interesting because, again, today we had this class that we were teaching this morning to newbies. And one of the questions that I always pose to people that are wanting to get into this business is, what is wholesaling? And obviously you have, a group of people that the majority of them have been, graduated from YouTube University and Bigger Pockets and all these other places and resources to get information. But without, having someone that truly has the knowledge and experience, information can be very misleading.
Yeah.
So when I ask people, what is wholesaling? The most common answer that you will get asking people what is wholesaling is, oh, it's flipping a contract.
Mm.
Flipping a contract. I get a property contract and then I sell that contract.
Okay.
That is actually a method of wholesaling a property. True wholesaling is buying a property at a low price and selling it at a low price to another investor so that there's enough room for him to profit if he's going to rehab it or if he's going to buy and hold it, make an Airbnb or whatever he's going to do with the property.
Gotcha.
So to define wholesaling, it's buying low and selling low.
Okay, and so why would an investor do that? What are the inherent advantages of wholesaling?
Number one, since you're not actually buying and holding the property for any period of time, truly, for the most part, you only need transactional funding.
Mm-hmm.
So if I'm going to buy a property that's $100,000 and flip it, I only need to borrow $100,000 from somebody one day.
Yeah.
Because I'm going to purchase it in the morning, and then I'm going to be flipping it for $120,000, where somebody else is going to buy it, and I'll get my $100,000 back plus my $20,000 in profit.
Mm-hmm.
Now, obviously, these are HGTV numbers because you got to talk about closing costs and talk about transactional funding. There's always a fee for that. Usually people charge it at least a point or 1%. So if I'm borrowing $100,000 for a day, they're going to charge me $1,000.
Mm-hmm.
I'm going to have closing costs when I buy the property. I'm going to have closing costs when I sell the property. But, inherently as a wholesaler, I'm in a position where if I get into a contract on a property and I can't find a buyer, I don't have an exit strategy, I can simply cancel the contract, get my deposit back, and I haven't lost a single dollar.
There you go.
I've spent time, If I'm buying a property at $100,000 and I'm going to resell the property, then I'm going to have closing costs when I buy the property and when I sell the property. We call that a double closing.
Mm-hmm.
So if I'm buying a property, let's say it's $100,000, and just for even numbers, I'm going to have $2,500 in closing costs when I buy the property as a buyer. Then when I sell the property, let's say I'm selling it for $125,000. When I sell the property, I'm going to have closing costs again. And again, for even numbers, let's say it's $2,500. Mm-hmm. Your closing costs as a buyer is always going to be more than when you're selling the property because you have the owner's title policy that you have on your closing cost side. So I've got $5,000 in closing costs. I bought it in the morning for $100,000. My buyer, they purchased it from me in the afternoon, same day simultaneous closing or double closing is what we call it. It is 100% legal to do. You can do it in every state around the United States as long as your title company is an investor-friendly title company and understands the process. Mm-hmm. So when I sold it in the afternoon for $125,000, basically I had $5,000 in closing costs, $2,500 from each transaction, and so I've netted $20,000.
Mm-hmm. And then even if you borrowed that money at one point, that's still $19,000. That's a hell of a day, huh?
Exactly, 100%. And a lot of these properties, to be honest, once you learn wholesaling, the other attractive aspect of wholesaling is that most of the deals, I don't need to spend more than 3 or 4 hours in total. That's marketing, going to the property, taking pictures, negotiating the deal, negotiating with my buyer, marketing it, selling it, and getting to the closing table. So if I'm spending 4 or 5 hours and I'm making anywhere near $19,000, I think everybody would agree that is really good money.
That's amazing. And a lot of that is because you have your system, right? You've been doing this so long that you're efficient at it. But it seems like the hardest part is finding the motivated sellers. Not that it's hard, but that's where you spend, that's the opening of the funnel that you really need to focus on when you're starting out, huh? Building your network so you could find these motivated sellers.
Because if you have a good deal, you can find buyers all day long.
Yeah.
So finding a motivated seller is the most challenging part. But as long as you have the right mentor, the right coach, and as we say, even Tiger Woods, this guy still has a swing coach. Believe it or not, he's been playing all of these years, won all of these championships, but he still has a mentor. So if you have the right mentor leading you down the right path and understanding how to market for these potential motivated sellers, and then for markets, there's different marketing. I mean, you have to know your market. You have to know what people are responding to. Is direct mail working better than cold calling or vice versa?
Mm-hmm. Yeah, and a lot of that is just
Yeah,
trial and error and learning from other people's mistakes, which is why, or from other people's successes. So that's why mentorship and your organizations are absolutely invaluable for folks.
Yeah, and I think that's part of it, the aspect that I've learned obviously more. You'll always learn more from your mistakes than you will your successes.
Mm-hmm.
And so if you've been bold enough to actually go out there and make some mistakes, a lot of people don't understand, and their number one fear is, I don't want to go out and start door knocking or start doing real estate because I'm afraid I'm going to make a mistake. Well, that actual fear is that is the mistake that they make, and they never get started. You have to embrace your mistakes.
Oh, okay.
You have to realize that making mistakes is a helping hand. It's an actual tool for you to use, and it's a sort of what I use as a gauge. I know that if I'm not really, obviously in my wholesaling that I do now, I've been doing it for 11 years. I don't really make too many mistakes in my wholesaling, but as an entrepreneur, and trying to expand my businesses and expand my real estate, I started this Flip Coach program, which is a national program. I have never done a national program before.
Yeah.
I've done local programs, but I've never done a national program. So I have learned over the last couple of years some new things that's from mistakes that I've made.
But definitely, people I think don't want to go through that learning curve or get started because of that fear, because they think they're going to be putting up, their whole life savings or investing hundreds of thousands of dollars cash or all these loans, and if it goes south then they're screwed. But there's a lot of other ways to do it, like wholesaling or pooling resources. So talk about some of the other avenues that the average person could get started with you investing.
Right. So, we've talked about wholesaling, and obviously, the biggest advantage to wholesaling is that you're taking the least amount of risk. When people start in real estate, the reason why we use that as a base model is because wholesaling is your crawling, rehabbing is your walking, and doing commercial and large multifamily deals, you're running.
Singles,
and as they say, learn to crawl before you walk.
Singles, doubles, and home runs, right?
There you go. Singles, doubles, and home runs, 100%. And the problem is that most people, they want to start running. They want to start with that multi-million-dollar deal, but that's just not realistic. So when you learn wholesaling, it gives you then the ability to start rehabbing. After you've wholesaled, you've made some money, then as long as you have the proper guidance, start with your first rehab project and know and understand what it takes to fix a property. Know and understand, the retail market of how to price that property, how to sell that property to an end buyer, because all of those skills that you learn doing that, they are going to help you in other facets of real estate. If you become a buy and hold landlord, you're going to want to understand the scope of a rehab, because if your rental property needs a new roof, you certainly don't want someone, overcharging you for that just because simply you don't have the knowledge or know what it takes to put a roof on a house.
Wow, that's some amazing information from Ryan Kuhlman, president of the National Real Estate Investors Association. But we're just getting started with Ryan. This is part 1, and I'm going to bring you part 2 of this podcast interview with Ryan Kuhlman coming very soon, and we'll talk more on real estate investing. Thanks so much for tuning in to the podcast, and log on to remnorm.com, real estate marketing with norm.com, if you need anything at all. Take care, guys.